A fresh read from the chips this morning. Taiwan Semi reporting a 45% jump in July revenue compared to last year. That was thanks to strong demand for the company's AI chips. Shares are, well, they're bouncing around along the flat line here, but a big outperformer on the year.
Okay, one of their key customers, of course, is Nvidia, and that stock has been whipsawed this week. It's coming off what is its best day this month. But the company has shed about $1 trillion in market cap since mid-June when it was at its highs. Let's get more on that name and a bunch of other semis. Joining us now is Bernstein's Stacy Rasgon. Stacy, always great to have you. You know, let's just start on Nvidia. Some of the news this week on the delays potentially as a result of sort of design issues around Blackwell. Just give me your take. Is it real, and what's it going to mean?
Yeah, it seems like it's real enough. There's enough smoke there. There's some fire. We've had some confirmation from other folks in the supply chain. Supermicro kind of alluded to it. And so it seems real. It doesn't seem major, right? It seems like a relatively minor design issue. It looks like they may have already fixed it. We've got maybe a 2 to 3 month delay, I think. What that really means is where people were hoping that like real volume shipments would happen in calendar Q4, it looks like it may be Q1. So it's a slight push out. You have to remember, this stuff is difficult to do. So I mean, like even Nvidia is not necessarily immune to it. In the meantime, though, like we've had hyperscale CapEx guides that are all still going up. All of those would have incorporated whatever is going on. Like they didn't just find out about this, because of the news stories. They would have incorporated it. And Nvidia's got strong demand for their existing architecture, which is called Hopper, and it looks like they're likely increasing production of that to try to backfill and smooth things over until we actually get the Blackwell launching in more volume, maybe a quarter later. But structurally, I don't think it's that big of an issue. Now sentiment-wise, clearly it's impacted the stock. I think the stock's been a few things. One was there's just been a general reduction of sentiment on the AI space in general. People are just starting to look at lots of dollars are getting spent. They're wondering about where's the return. So the sentiment wasn't quite as supportive as it had been. And then you have this on top of it, which weighs on it. So, I mean, that's kind of what's been going on. But structurally, I don't know that anything really has changed with Nvidia. Right. We got a little push out. I think it'll be okay.
All right, well, right. I mean, demand is demand. It's still there, as you point out. What about the stock itself and the multiple and what we've seen in terms of that and whether that makes it even more compelling, I guess, from the perspective of somebody like yourself?
Yeah, look, so NVIDIA's never really been all that expensive. I mean, even at its peak, it was maybe 40 times forward earnings. But the sell side forward numbers that's based on are likely still too low. 40 times is about its 5-year median or 5-year average, so it's not actually that expensive. It's cheaper now. It's probably 30 times now. At least I think you've de-risked it a little bit, like going into the back half on the back of this. And if they do announce some kind of a delay, if they verify it on the call, at this point it won't be like everybody kind of knows about it. So yeah, we can kind of work through this. Demand still looks really strong. If you're pushing the volume into next year, it actually makes next year look better. Again, more upside to the numbers, hopefully. Yeah, I think the valuation here still looks quite attractive.
Okay. Stacy, I realize you don't actually cover this name, but Applied Materials, we're going to get those results next week.
I cover Applied Materials.
Oh, you do? Okay. I stand corrected. Okay, what are you watching for there, and how much of an indicator is that to the broader semi space as we do look to the second half of the year?
Yeah, so there's a few things. People are clearly watching China semi-cap demand, which has been very strong. Now, AMAT is one of the few companies in semi where they've actually already guided their China mix to be declining as we go into the back half, and so I'd like to see if that's happening. But I think the whole China overbuild worry is not as big of an issue for AMAT maybe as it is for some of the others. Many of their peers have 50% of their revenue coming from China right now. AMAT should be, I think they suggest it to be going down to the low 30s%, which is kind of normal for them by the end of the year. So we'll be watching that. The other thing which I think has influenced a lot of the semi-caps recently was Intel. So Intel just nominally cut CapEx, and that caused some angst. I will say, though, Intel took their CapEx guidance for this year. I guess they said from $33 billion to $26. I actually had to take my CapEx numbers for Intel up, not down. I actually don't know where that $33 billion number came from. I was at 24. I had to take it up to 26. Next year, I took it down a little bit. We had been at 24. I think we're at 21.5 now for Intel. So a minor reduction. But again, the same thing. The semi-caps would have known about whatever Intel is doing, like before Intel announced it. So I'm not too worried about that. But those are the kind of things that people will be watching for, I think, with AMAT as they report. I think it's on the 15th of next week.